has become filled with barriers. So we build specially adapted homes at Homes for Our Troops. And thanks to our donors and supporters, this life-changing gift of freedom is provided mortgage-free to these veterans. But we need you to join us too in completing this important mission. Please visit hfotusa.org and help build homes and rebuild lives.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Inflation and Your Retirement Plan. Mike, why is it so important for retirees to account for inflation in their planning?
Yeah, massively important, and I think any retiree over any course of history will tell you that. And when you experience inflation, when you're on a fixed income, it's tremendously difficult. But even small changes in the rate of inflation, or seemingly small ones, can really lead to massive changes. For example, if you're facing 2% inflation, that means that prices roughly double every 35 years. If you're looking at 4% inflation instead, those same prices double only in 17 years. A huge change to your budget.
And obviously, this also then influences, your overall spending habits and your withdrawal rate over time. These are things that you have to account for in your planning. You can't just assume that you're going to necessarily see the same kind of inflation that you've seen previously in retirement.
Yeah, look, I think generally speaking, over the course of the last 20 years, while there have been massive drawdowns in equities, the inflation figure has remained relatively stable. If you're worried about something that could look different from that over the course of the next 20 years, then it's important to really consider what that would mean for you.
Our guide this month is titled Inflation and Your Retirement Plan, and there are two ways you can request it. The first is by calling 800-393-4001, or you can request it online at armstrongadvisory.com. That phone number again is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking things off here, it's Chuck, Mike, and Tucker with you, and we've got a busy week this week that we're going to be digging through. Not too much today. Today's pretty quiet. We got New York Empire State Manufacturing Index data at 8:30. It's not overly important. It wasn't particularly good data, but I don't think that there's any meaningful fun signal that you can take from it. Not that fun's what we're about here, but occasionally.
I think we're all about fun, Chuck.
Not all about fun.
He said in monotone voice.
Zero fun, sir. Tomorrow, we've got retail sales data, so going to be interested to see what consumer spending looked like for the month of August. Also coming out tomorrow, we're going to be getting NAHB Housing Market Index. This for the month of September, so I think it'll be interesting to see, hey, we've had lower rates kicking in over the last couple of weeks. Does that spark a little bit more buyer traffic? Does it spark a little bit more optimism for builders? Or do they still remain downbeat the way they've been, for much of the last year or so?
We've got the import price index. I don't think it's something that we generally track, but if you're looking for evidence of foreign suppliers of goods, maybe discounting things or lowering prices in order to maintain or keep market share in the U.S. with tariffs, that could be some evidence of that if it shows up anywhere in those reports.
Wednesday, big one. We've got the EIA gasoline stocks weekly change.
Yes.
And everyone's going to be focused on that. Also, a little-known bank called the Federal Reserve at 2 p.m. is going to announce what they're doing with interest rates. They also, the good news about this Fed meeting, they also are going to be giving us their summary of economic projections, the SEP, which tells us what they expect inflation, growth, interest rates to be over the next couple of years, so that'll be informative, I think. And we're also going to get building permits and housing starts on Wednesday. Thursday, another week of weekly jobless claims and Philly Fed Manufacturing Index. And then we finish things off on Friday with the Baker Hughes oil rig count, which always a good way to finish a week, Michael.
Thursday of last week, we did see a good uptick, not a good uptick, but a pretty big uptick in initial jobless claims. There's been some data pointed at Texas that we pointed out on Thursday of last week where you saw that jump. Texas did acknowledge they've been having issues with fraudulent claims for unemployment, but did not definitively say that that's what caused them to spike. You also had, this was the reading over Labor Day holiday, so some weird seasonal stuff. So we'll be looking for some evidence here. Was that a weird one-time type thing, or do we have the start of a new trend here? Those jobless claims last week came in at 263,000, which was above all expectations.
And given all the noise, I suspect that that's a one-time move into that range.
Yep.
If it's not, and we see similar readings in the coming weeks, then that becomes, a sign that the labor market has taken a turn for the worse. But that's not what we have in the data thus far, and we're just gonna have to see how things go there.
So let's talk a little bit about this data point that really matters. What did you say, gasoline?
Yes, the EIA gasoline stocks index.
I'm joking. The Federal Reserve meeting is the one that matters here, and for those that haven't been paying attention, widely anticipated that they're going to kick off a new rate-cutting cycle with a 25 basis point cut. I do think it's generally expected that they continue that with future cuts as well, Chuck. And they are, I think we should contextualize that because they're doing this at a time when inflation is running. Where are we sitting on core CPI right now?
For the last 12 months?
Yeah, let's go there.
Yeah, so if you take a look at, and I'll give you a few different inflation numbers just because I think it's useful to contextualize. If you look at headline CPI, it's at 2.9. Core is at 3.1. PCE headline is at 2.6. Core is at 2.9. And for the producer price index, headline is at 2.6. Core is at 2.8. So you're generally, call it 2 3/4 to 3 1/4. You're pretty consistent with right around 3% core inflation, I think is the fair way to look at it.
Which is not world-ending inflation. It's a lot lower than what we were dealing with in 2022, a lot lower than we were dealing for most of the 70s and early 80s, but is a fairly significantly higher inflation rate than what we became used to throughout all of the 90s, 2000s, and 2010s. And yet the Fed is pushing for a rate cut here on concerns about the labor market. Is that your read too?
Yes, and the other piece is that core inflation has accelerated in the last few months as well. At the end of the May data, it was running at 2.77. It's now at 3.11.
Yep.
So you've seen an uptick in core inflation over the last few months that has been notable. And why this matters is not because 3% inflation in and of itself is awful. The 1990s were a period where inflation averaged pretty close to 3%.
Yep.
And it was one of the best economic decades that we've seen. But it was also one where much of the inflation that we saw during the 1990s came during a couple little bursts where you had higher oil prices and things like that at the outset of the decade because of, the outbreak of the Gulf War and things along those lines. And so if you look at core inflation during that time, and again, I think this is kind of where the meat is on the core inflation number and why it matters. So if you, again, looking at the 1990s and say, where was core inflation during that time period? I'm just getting the average here just so that I can make sure that I'm speaking appropriately about this. 1990s core inflation was 3.22, so it was hotter during that time. But all of that was basically stuck in the first couple years simply because, again, even when energy prices, go up, it spills into other parts of the economy. Plus, you had some stuff going on, with housing and this and that. So most of it was 1990 to 92. Effectively, core inflation in the 90s wasn't above 3% at any time after 1993. You were generally trending down. By the end of the 90s, core inflation was running at 1.88% for the prior 12 months, and it wasn't even above 2.5% from 97 onward. So I think that when we look at it, most people, when we talk about the 1990s and how great of an economic decade it was, we don't say, man, 91 was the year.
Yeah.
We're talking like 95 to 2000, and during that time, core inflation was under 3% the entire time. It briefly came back above for, a couple months in mid-95, but that's it. So I think that when we're trying to figure out, what this means, the danger of core inflation running at 3% is not that inflation runs at 3%, but hey, are you going to have energy prices falling 10% year over year like they've had for the last year in perpetuity? Is that going to be what you see? Probably not. Energy prices tend to be kind of mean reverting. They go up for a little bit. You have, supply that comes offline because people aren't, doing as much drilling. and then prices go up the next time there's an increase in demand, and then you get more drills in the ground, and it's this cycle back and forth.
Right.
So the concern with core inflation running at 3% is, hey, if energy prices next year move up 10% instead of down 10, which, again, I don't know where they're going to go. No one knows where oil prices will be. But now all of a sudden you got headline inflation. Instead of running, 2.9, now it's running 3.6, 3.7. And, hey, how do we, feel about inflation accelerating closer to 4%?
Right.
That's why you don't want to have core inflation running that hot. It's because the headline number never stays in a straight line. And when you have those wobbles because of food and fuel, hey, 4% inflation starts to feel uncomfortable in a hurry. So
you got to be awfully concerned about the labor market if you're going to cut into that environment.
You do. And here's the thing. I think that you can justify cutting in this environment because there are signs that the labor market is decelerating faster than inflation is accelerating.
Yep.
But you got to have, your hand on the rudder and say, hey, I got to turn quickly if the economy turns, because otherwise I'm going to be behind the 8 ball and inflation comes back the second that the labor market turns and the second oil prices start moving up again. I got to be in front of that.
And it's especially difficult given, I guess, using the same comparison there, how poorly they were guiding that ship back in early 2022 when they were faced with a very different scenario in a lot of ways, but a lot of the same fundamental issues.
It was an easier question to address then.
Yeah, and they got it wrong.
And they were still too slow to start raising rates then. So, again, if you want to, the whole pattern from the Jerome Powell Fed, hey, we're gonna be dovish at the first sign of problems in the economy. But when it comes to inflation, we're not going to respond necessarily as quickly. That's kind of what we have in evidence at this point now. Let's take a quick break. When we return, let's talk a little bit about Morgan Stanley and JPMorgan. They're trying to tell you what they think the stock market's going to do next. We'll tell you if that's useful information or not.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. the U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange brought to you by the U.S. Virgin Islands Department of Tourism. Looking for a getaway that's easy, warm, and unforgettable? Discover the magic of the U.S. Virgin Islands, St. Croix, St. Thomas, and St. John. Just a short flight from New England with no passport needed and no money to exchange. Soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your fall escape now at visitusvi.com. That's visitusvi.com.
Morgan Stanley and JPMorgan see stock rally stalling after Fed cut. That is the headline from Bloomberg. I'll now quote here. Strategists from Morgan Stanley, JPMorgan Chase, and Oppenheimer Asset Management. How does Oppenheimer get left out of the headline?
Poor guys.
What gives?
They're only including companies whose names.
The guy had one movie made about him a couple of years ago, and now no one cares.
You have to have the name Morgan in your company name in order to be included in the Bloomberg.
Also, I don't think it was the same Oppenheimer, was it?
Trying to confirm now. Stand by.
I would imagine that
It was probably named after him, no? We're going to name a fund company. What do you think we should go with?
Oppenheimer. It's a little bit long. He's very smart, you know? Anyways, so they're basically saying, look, you might start to see more caution coming into the market. And to which I say...
useless information.
Why now? I'm not saying it will or won't, because here's the thing.
Also, a more cautious tone replacing the bullish mood.
Hasn't there been a cautious tone all year?
Yeah, and that could mean literally anything.
Right?
Like stocks have rallied 12.5% through September, so our view is that they won't be as optimistic as they were for the first 9 months.
Tell me how a caution tone trades. What does that mean for price action? So
the only thing that could make them have egg on their face with this story is if equities rally another 20% into the year end. Otherwise, every other market outcome, they could say, told you so.
Someone has to look. There's a million people out there who look at all this stuff now. Someone's got to be keeping track of who's actually good at these predictions or not.
But what does this prediction even mean, right? If I'm to take a look at this and say, were they right or wrong? What is the benchmark by which they are right or wrong?
I don't know, and here's the other thing.
Which is why you can't build a database of all this stuff, because anything other than markets rallying 20% by year end would mean that they're right under this.
And what does this mean? So this is from Morgan Stanley's Michael Wilson. Near-term risk is centered on the tension between lagging weak labor data and the Fed's response that may not meet markets. Still, he recommended buying any dips, and his most bullish scenario sees the S&P 500 climbing 9% to 7,200 points by mid-2026. So, what are we even doing here, actually?
I don't know. That story wasn't worth the paper that Tucker printed it on.
But it was worth us talking about it.
Yeah.
Nvidia, China. There's some meat to that goes beyond whatever Morgan Smith said.
So China declared that they violated antitrust law based on this agreement that they inked with the Chinese government back in 2020, which I didn't remember. They bought a company called Mellanox Technologies. It's an Israeli-American firm that they bought back in 2020 in order to get over the hump of antitrust concerns with each country's regulator. They signed some stuff with China saying, no, we'll continue to make sure you get semiconductor chips and a good supply of them, which has obviously not been possible given that the last two presidents have heavily restricted the export of semiconductors to China.
So the question whenever you're talking about anything related to China and their regulatory apparatus is the right way to phrase it is, why is the Chinese government doing this now, and what do they want from someone? Because
who are they shaking down?
Yes, yeah. Because the Chinese government could regulate anyone and everyone on any particular day, but they choose to do so in very clear ways. The best example of this, Jack Ma a few years ago came out and criticized the Chinese Communist Party. A couple weeks later, hey, guess what? You have to cancel, some IPOs. We're going to conduct a bunch of investigations of Alibaba and make things very, very difficult for you. So when China's doing this, I think that there are a couple different ways that I can potentially read it. The first is there's now a clear chip on the table between China and the U.S. in terms of, hey, you give us something that we want, maybe we'll make this antitrust, investigation go away. As opposed to, well, we're just telling our companies not to buy Nvidia chips. This could be the thing that eventually greenlights, the buying at some point. Maybe. Other things that you can read into this. Hey, Nvidia is clearly, being touted as something that, like an entity that's pretty close to the U.S. government right now. I mean, how many times have you seen Jensen Huang and President Trump together in the last 3 months?
Yep.
It's more than a handful.
Yep, it's been a lot.
It's quite often. And so what message is this sending about, hey, are we going to try to make things more difficult for companies that are more closely aligned with President Trump? Like, I think that could be a reasonable way to read this as well. And this also comes on the back now of China pushing for the president to come and visit China in a state visit that they can obviously, very tightly control the optics of and everything. Yep. And yes, I still look at this quite honestly, and I say the Chinese government hasn't really bent on anything this year. What's going to be the thing that gets any kind of deal over the hump, and does the Chinese government actually stick with it instead of just signing it and then, reneging on it? This all filters into this broader conversation, in my opinion.
Yeah, there's some other things that don't. I know that the president tweeted on a hint, or I don't know what platform he used, but he hinted at a deal with TikTok that's going to be announced sooner than later. But quite honestly, the main two things that matter right now between the United States and China are semiconductors and tariffs, and the two are intertwined.
And rare earths. I'll put that in the conversation as well.
Yep.
Yeah, those three.
Yeah. If they want to really turn the screws, then rare earths matter quite a bit. And so we can talk about distractions like TikTok, but it doesn't matter. What matters are those three. And will a state visit have any effect on them?
Quick break here. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
So this is a tough asset in general. When you're dealing with retirement plan assets, it's difficult from an estate planning standpoint or a Medicaid planning standpoint to deal with them. Why? Because they have both an income tax component and an estate tax component, right? They're taxable when you take them out, and when you die, they're subject to your estate tax. So the general way to do this would be, one, you can name the spouse as the beneficiary of the IRA, or you can name the kids the beneficiary of the IRA, or sometimes you can name the trust the beneficiary or the estate the beneficiary. But it all depends on the size of your estate, the size of the IRA. But the one thing you really can't do is you can't take the asset and transfer it to the irrevocable trust or revocable trust while you're living. Otherwise, it will create a income taxable event. So tough to plan for those in advance unless you name the estate the beneficiary.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699. That's 848-5699, or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are starting a Fed meeting week in positive territory as investors eagerly await the central bank's likely quarter-point interest rate cut at the conclusion of their meeting on Wednesday. Right now, the Dow is up 0.25% or 118 points higher. S&P 500 is up about 0.5% or 32 points higher. NASDAQ up 0.7%. Russell 2000 is up 0.2%. 10-year Treasury yield down 1 basis point at 4.047%. And crude oil up about 1% higher today, trading at $63.41 a barrel. According to Treasury Secretary Scott Bessent, the U.S. and China have reached a framework deal for social media platform TikTok. President Trump and Chinese President Xi Jinping will meet on Friday to discuss the terms. Meanwhile, a new filing with the SEC revealed Tesla CEO Elon Musk purchased about $1 billion in the EV maker's stock, marking his first purchase of the stock in the open market since February of 2020. Tesla stock is jumping over 5% higher on that news. Another major tech name in Nvidia making headlines after China's antitrust regulator said a preliminary investigation showed the chipmaker violated the country's anti-monopoly law and it would conduct a further investigation. Nvidia's stock is down over 1%. Separately, China said it launched probes into certain U.S. analog chip imports. Shares in Texas Instruments down 2% on that news. However, analog devices and ON Semiconductor are seeing modest gains at the moment. The Wall Street Journal reported that agriculture company Corteva is mulling a breakup that would separate its seed and pesticide businesses into two separate companies. That stock is down about 4%, and with its 4% gain today, Alphabet officially surpassed $3 trillion in market cap for the first time in its history. I'm Tucker Silva, and that is Wall Street Watch.
Mike, piece from the Wall Street Journal. Headline is Whirlpool tells U.S. authorities its rivals could be evading tariffs.
Snitches.
And this is interesting to me, more because I think it's a bad look for Whirlpool than anything else. So, the appliance maker Whirlpool is stirring up a new trade dispute, telling the Trump administration that its overseas competitors could be evading hefty tariff bills by undervaluing their imports. Okay. A Wall Street Journal review of the data shows that garbage disposals from China dropped from an average of $21 over the first 5 months of the year to $9 in June, and then less to $8 in July. Gas ranges from Thailand more than half to $175. The one that seems really crazy, washing machines from South Korea sank from $838 to $73. Okay, so let's look at this, and I'm going to look at this through the context of people I know that run businesses where they import a lot of stuff from Asia. And in the cases that I know, where I've got 3-4 buddies who work for companies that do this, and this is like directly related to how they run their business, in every single instance, they said that, hey, whether we were looking to, replace goods that were made in China with ones in Vietnam, or whether we were sticking with, a Chinese supplier, in every single instance, they said their supplier came back with a better offer on price than where they originally were. Because the supplier agreed to help them eat some of the cost of the tariff in doing so.
Yep.
So one would expect that if companies are doing that in large numbers,
import prices come down.
Import prices would come down.
Yes.
Are they necessarily coming down this much? I have absolutely no idea. The one that seems kind of insane to me is the front load washers from South Korea, how they fell over 90%.
Yeah, seems unlikely.
Seems a little bit unlikely. But could I see, as part of, a Chinese company trying to figure out, hey, we got to keep these garbage disposals flowing to the United States? Are we going to cut our price by a half and the state's going to subsidize us to make up the difference?
Possibly.
Yeah, I could see that as absolutely being possible, and not fraud, but just China once again figuring out how to dump goods to maintain market share while not actually, working by market principles. I could see that absolutely being the case.
Remember, too, if you make garbage disposals, you might not only make garbage disposals. So you might say,
Sure.
okay, we source these components from other countries, so we're going to take a big loss on these garbage disposals because they're all from China, whereas we can cut prices only 10% on this other competing product and therefore still maintain the contract with XYZ company to supply all of their different appliances that go into a home. So it's probably both, but why do you think it's such a bad look for Whirlpool other than they clearly can't compete with these companies and haven't been able to for a little while now?
Well, here's the way that I look at it. So, look, there's definitely some trade fraud that happens. I have no doubt about it.
Of course.
Yeah, and it could take any number of different forms. Where I guess I'm going on this is, look, there's no company in the world that is 100% correct about how they do everything. Even if they're not intentionally doing something wrong, every company has something where it might be a little oversight or this and that or whatever. All I know is that Whirlpool's competitors, you better believe, are going to be on the horn to U.S. regulators saying, hey, check out what Whirlpool does, how's Whirlpool treating their workers at this facility? Or how, they're going to be trying to bring up something.
Yeah.
And so that's why I think that this is potentially, it doesn't solve the problem, actually, if there is one. And it potentially puts Whirlpool, with other companies saying, hey, who are you to call us out for problems? Go manage your own backyard.
Yeah, so Whirlpool does produce about 80% of their U.S.-bound appliances domestically. They are the last remaining one who does so, the last large one that does so.
Sure.
GE is now owned by Chinese-based, I don't know how to pronounce that company, actually. I see their appliances all over. Ayer, H-A-I-E-R. Do you guys know? I'm not really sure how you pronounce it, but Samsung and LG obviously make up all of the washer-dryer market and based in Korea. And so Whirlpool, which also owns a few other brands, is the last I think they own Maytag and a couple others. There's not a whole lot of domestic producers of this type of equipment. And so they're, I suppose, trying to defend their business, but quite honestly, if you still can't compete with these tariffs in place, regardless of how they're cheating them, it's not a great look.
Look, GE Appliances came out and said, we value competition and believe it's good for U.S. consumers, but this attack from Whirlpool looks like frustration over their own lagging performance. It does kind of feel a little sour grapey.
Yeah.
It does. Let's take a quick break. When we come back, we're talking gold right after this.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Artificial intelligence is changing the way companies invest and how markets move. Add to that global trends like international outperformance, a weakening dollar, and shifting bond yields, and you've got a complex landscape for investors. This is Mike Armstrong from the Armstrong Advisory Group, and we're hosting 2 financial seminars this fall to help you understand what it all means. Join us at Margaritaville Resort, Cape Cod on October 9th, or at the Showcase Superlux in Chestnut Hill on October 16th. Call 800-393-4001 to reserve your your seat. We'll talk about how diversification and preparation may help you navigate uncertainty so your plan is ready. Don't miss this chance to get a clearer picture of your financial future. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
All right, let's talk a little bit about gold.
I love gold. Thank you, gold member.
It's yellow, it's heavy, and it's now having its best rally since 1979 in a single year.
Yeah, sure is. Up 39%, outpaces anything we saw during COVID, during the Great Recession. Typically, when I hear people talk about gold, and I think sometimes it's not always properly attributed, but typically when I hear about people investing in gold, it's as an inflation hedge or as a catastrophe hedge. Is that fair when you talk to people about their investments in the shiny yellow metal?
I think so.
So what about this year is contributing to a 39% rally? Because inflation, while elevated as we talked about compared to where I think we were comfortable in the 2000s and 2010s and mid-90s, is not too much of an issue. I think you could talk about increased global tensions in this day and age, given that we are, still navigating through a pretty complex trade war. But what should we attribute this rally to?
So I think that when we look at this, it's important to understand whether this is something that is unique to the U.S. or something that's happening globally. Here in the United States, whenever we talk about the price of gold, we talk about it in dollar terms.
Yep.
So if the price of gold were rising in dollar terms, but falling elsewhere in yen terms or in rupee terms or in euro terms, you'd say, okay, this is a story about the U.S. dollar and its weakness and the lack of trust in the U.S. dollar.
And the dollar has fallen this year.
However, Here's what I have to say about that. In gold, in terms of Australian dollar terms, has gone from around 4,200 up to 5,400 this year. In euros, it has gone from around 2,500 to 3,000 this year. In yen, it's gone from around 400,000 to 525,000. In rupees, it's gone from around 220,000 to 290,000. In yuan, it's gone from about 19,000 to 25,000. The point that I make is when you look at all of the major worldwide currencies, gold has gone up in value against each of them.
Yes.
So it's not something where people are specifically looking at the United States and saying, bad, buy gold. It is very much, hey, there's a demand for this hard currency, because I think that when we talk about, you mentioned it as like catastrophe insurance. I think that the three things that I see right now out there.
Costco. Sorry.
The three things that I see out there right now that could potentially relate to this. Number one, countries around the world don't care about their deficits. You look at what the EU has announced on this stuff, what China's announced on this, what the U.S. is, and everyone's basically printed, baby. We'll figure it out. So that's number one. Number two, you've got some real geopolitical concerns with some hot shooting wars this year. Whether you're talking about the continuation of Russia-Ukraine, whether you're talking about the India-Pakistan stuff that flared up for a little bit, whether you're talking about Israel-Iran. There's some real concern on that side of things. And finally, kind of in a related note, there's just this rush out there for natural resources of all types right now.
True.
Like, it's just, you can feel it, like, just as this constant drumbeat of what's going on, whether it's rare earths, whether it is uranium, whatever it is out there, it's this drumbeat that's just going. And so I think these three things are kind of feeding into gold getting bid up across all currencies. And it's, if someone tries to be like, well, this is the U.S. because of tariff policy, no. Because if it were the U.S. because of tariff policy, gold wouldn't be going up in euro terms or yen terms and stuff like that in the same way.
Yeah, it can't just be that. It can be a contributing factor, and sure, I think certainly there's more uncertainty. I think there's more uncertainty about the U.S.'s strategic relationships with a bunch of countries. 2 years ago, I couldn't have imagined the tensions between the U.S., Canada, and Mexico, the U.S. and India. Those relationships look a lot different than they did just a few years ago, and so I think that's a contributing factor, but you're right. Were it all that, you would see the dollar weakening and that being the only thing.
Correct.
Folks, want to talk to you about the upcoming live broadcasts of this show, along with the seminars from Armstrong Advisory Group. Chuck's going to be there. I'm going to be there. We're doing two of these events, one down at the Margaritaville Resort on Cape Cod. That's October 9th. Following that, we're doing the Showcase Superlux in Chestnut Hill on October 16th. If you have not yet reserved your seat, please do so now. The number is 800-393-4001. If you've never been to one of these types of events, or even if you have, you'll get to sit down, chat with us. We do the entire show and chat with folks in between breaks about what it is we're covering and what it might mean. But if you have questions about what 2025, the rest of 2025 and 2026 might mean for your financial scenario between inflation, what we were just talking about surrounding gold, and really the main big topics that are dominating the conversation this year between AI, trade, and the U.S. position in the world going forward, please tune in and book your seat at one of these two events. Again, the details here. We are going to be doing this first at the Margaritaville Resort down on Cape Cod. It's on October 9th. Following that, Showcase Superlux in Chestnut Hill on October 16th. Join us for lunch, catch a broadcast of the show, and then we'll be talking to you after the fact. But space is going to be limited here. That number, once again, is 800-393-4001. You can reserve your spot, too, by going to armstrongadvisory.com/events. But once more, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
New York Times piece. They had money problems. They turned to ChatGPT for solutions. Did they make money off ChatGPT?
No. ChatGPT had some interesting suggestions as to how they might clean up their money problems, though. Some of them very reasonable. Others awfully strange.
It's another thing where, hey, you can probably be directionally accurate in most cases with the advice that you get. But if you're not a subject matter expert, you won't know where it's telling you something that's wrong with a whole lot of confidence behind it.
So I honed in on one story here with a Jennifer Allen from Clayton, Delaware, who had racked up some $23,000 worth of credit card debt and decided to make a 30-day challenge to ask GPT how she could improve her situation every day. One of the, I guess presumably this is a suggestion from ChatGPT, was that she donate plasma for $80. That's good. She recovered $700 from her state's unclaimed property registry. Fantastic. The one that I had a tough time figuring out was who suggested she sell a fresh watermelon with her debt total tattooed on it, and then subsequently who paid $51 for said watermelon.
How do you tattoo a watermelon?
I would assume the same way you tattoo a person.
How much do you have to pay the tattoo artist to do it? Was it more than the $51 she got?
You know, she's a realtor, so I assume she doesn't also tattoo people, but maybe it's she already had the supplies, or maybe she just used a marker. I'm not sure, but that sure is inventive.
So, again, I think that, like most things, you can get some good advice from AI systems and some that is just not useful and not good. The other thing that I'll say, after using the most recent version of ChatGPT for, what's it been out for, the last month or so?
I'm not sure, yeah.
Honestly, it's really annoying. Like, it's after everything that you ask it, it's like, do you want me to help you figure out how to do this and this and this in addition to this? No, I just want you to shut up and answer my questions.
Don't talk to her like that. You're gonna end up the first one killed in the AI wars.
Listen, when the robots come for us, and I know they will, like, what are you gonna do?
You know, honestly, South Park had a pretty good episode about this. Here is one of the problems with AI bias: is that it just wants to give you the answer that you want.
Yes,
and so it's going to reaffirm everything you say if you ask it for, hey, what do you think of this business idea or this plan that I have or this way of paying off debt? The main thing it's going to try and do is make you happy, just like social media in a lot of ways.
I just asked, tell me the positives of tattooing watermelons. It could be a practice medium for artists. It's cost-effective and accessible.
Would be the right answer.
It's a biodegradable canvas. It's a conversation starter.
Yeah. No, you're dumb, Chuck. Quick break. A lot more to cover in the second hour of the Financial Exchange. We'll be right back.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month on the topic of inflation and your retirement plan. Mike, a lot of people listening might be familiar with the idea of the Consumer Price Index, the CPI, but rare is it that we find someone whose own personal rate of inflation exactly matches the CPI consistently.
Of course, we all have different spending habits. We all live in different parts of the country and have different effects of inflation. But I think a great example here, Chuck, is during a large portion of the 2010s decade, CPI was relatively in control and people got very little in the way of increases on their Social Security. However, healthcare inflation was pretty hot, and Medicare prices went up pretty dramatically during that period of time. And that is one area that dramatically affects retirees that doesn't play into CPI all that much and resulted in people seeing their Social Securities just not growing a whole lot during that 2010 decade. And so you really do have to evaluate the risk of, hey, here are my spending categories, and how might things like changes to the labor market or changes to energy markets, if I live here in the Northeast and I can't get natural gas and I'm instead relying on oil prices, how could those changes really affect my future finances?
Folks, our guide this month is titled Inflation in Your Retirement Plan, and the way to request it is by calling 800-393-4001. You can also request it online at armstrongadvisory.com. The guide again is Inflation in Your Retirement Plan, and that phone number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and stocks kicking off the week with a strong start. We've got the Dow Jones Industrial Average up about 0.25%, 85 points. S&P 500's up 0.5%, about 33 points. And the NASDAQ Composite up 167 points, or 0.75%. 10-year U.S. Treasury continuing to see yields falling, down 2.6 basis points to 4.034%. And then as we head over to commodity markets, oil, West Texas Intermediate getting a little bit of a bump, up 76 cents a barrel to 63.45. And we've got gold today up another $15 an ounce to $37.01 and 20 cents. So gold back above 3,700 for only the second time now. And we'll see if it ends up holding the previous time that it was there, which was, I believe, last Tuesday. It was up there for about a minute and a half and then went back below. So we'll see if it holds up better this time. But gold about $10 away from another all-time high at this point. Let's talk a little bit about the news out of Tesla today. Elon Musk he went and filed with the SEC a form to allow him to buy $1 billion worth of Tesla stock. And so this has Tesla stock rising by more than $1 billion. In fact, rising by about 6% right now. So several tens of billions of dollars as a result of Musk's show of support in the company.
Remember a couple weeks ago I asked if if Elon still has the power to move the stock?
He does.
Yeah.
And this dovetails nicely. Quite honestly, I don't know what else to say about this exactly, but this is on the heels of Musk's proposed new pay package that could be, again, like
trillions of dollars.
Yes, just completely crazy pants numbers. Potentially, $1 trillion if all of it ends up being satisfied, which I think is unlikely. But hey, shoot for the moon, right? So
I think most thought that his original pay package with the share targets that were looked at were thought were unlikely. So
yeah, and so the chair of Tesla's board, Robin Denholm, gave an interview on Friday on Bloomberg, and I'm going to read the quote here. He's a generational leader. There aren't any other people out there like Elon who can actually lead the company over the next decade or so. I happen to agree with her. Now, I don't agree with Elon Musk on a lot of what he has done in the last couple of years as far as like splitting his time and maybe spreading himself too thin. And certainly anytime that you get involved in politics, it makes things challenging from a business perspective these days. But I think that when you look at it, there's no one other than Elon Musk who can actually run that company, because without Elon, the stock doesn't trade anywhere near where it does today.
No.
Do I think that Elon is, critical to actually like developing the technologies that they're going to? No. Like anytime that you're in that big of a company,
he never really was. Like maybe he had some design.
No, but I think
influence.
sometimes some people think that like he might be like central to it, like he's Einstein and this genius who's single-handedly doing it. I don't think that's him. I think what he is exceptional at is not delivering products on time, which he's horrible at. But I think what Elon is exceptional at is identifying the lane that Tesla needs to travel in, pun intended, and then identifying what needs to be done in order to clear that path as well as possible for him. And that can mean that there are some times, like the early 2010s, where Elon says, yeah, I'm going to push for as much, I'm going to align myself politically in such a way that I can get as many subsidies as possible for my cars and solar panels and everything that I want to develop. And then, hey, now that I need, to get into robotics and AI and stuff like that, great, I can pivot and figure out how to make that work for me from a regulatory perspective as well. I think he is really good at doing that.
Yeah, I was going to ask the follow-up then, which is, okay, so what lane is he clearing for Tesla right now? It seems to be all about robotics.
I don't think he wants to be a car company anymore because it's a bad business. Like, not Tesla, but the car industry is an incredibly tough, demanding, capital-intensive business that is hard to operate in the best of times. And I think it served a role for Elon and for Tesla if we view Tesla not as just a car company but trying to do all these different things. I think it got them to the point where they have the capital to be able to do some of the other things they want to do now. But I don't think Elon, I mean, you listen to everything over the last couple weeks about, the new master plan version and this and that, and it's pretty clear that he's viewing Tesla's cars as being secondary to the future of Tesla as anything related to robotics and artificial intelligence. Right?
Yeah, it does. Yeah, and that's been where I've been kind of scratching my head is what is going to be the big breakthrough on that front, and is it going to genuinely drive, quote, 80% of the company's long-term value?
And here's the thing that's going to be challenging for Musk that's different from what he's done with Tesla to this point. Mike, was there anyone else in the world when Elon was trying to develop, mass market EVs in the mid-2010s, was anyone else there really as focused on it as he was? The big automakers didn't really care. They're like, okay, here's a hybrid or two.
No, not really.
Here's the Nissan Leaf. Great, it goes 90 miles. No one was really trying to compete there.
Yeah.
The key difference right now, everyone and their grandmother is trying to build robots and artificial intelligence programs. And this is going to be one where they're going to have to compete in real time to see who's the best of the best. And that's a fundamental difference from Tesla, where they had a huge head start on everyone. So if they can innovate faster and produce better products, okay, sure, like, there's that future, but they're going to have to prove it because it's a different competitive environment than the one in which they developed Tesla's core products over the last 10 years.
Yeah. I don't know. I'm also just struggling to connect a few dots. Like, they want to excel in robotics, and specifically they want to seemingly excel in a consumer-facing robot. I mean, at least that's what they are marketing and putting out there, the kind of humanoid-type robot.
Which, by the way, that's where everyone's focusing now.
Yeah, I mean, we've talked about, everybody's seen the videos from, what's the Boston Dynamics. Boston Dynamics and their type robotics. Maybe they can do that again where they can produce a product that is familiar like Tesla's cars were, but better than everything else on the market. But it's a kind of a new class of product that nobody has any experience with. So it is very fundamentally different from what Elon has done previously with Tesla.
And I do happen to believe that this is an area that people are not giving enough appreciation to as far as where it can go in the next 3 to 5 years. And I think it's just because it's so new. And to be honest, we're all a little bit freaked out by the idea of like humanoid robots running around and stuff. I get it. It's kind of creepy and freaky and scary. But here's the case, like, for a company, just as an example, is, hey, even if that robot requires human intervention 20% of the time, if 80% of the time it does exactly what it's told, then I can have one person run a fleet of 4 to 5 robots and get all of the productivity gains from doing that. It's not necessarily that you need fewer workers overall, but like think about just all the stuff that we need to do in the world, man. Just all the stuff that we need to do. And all the stuff that, by the way, no one really wants to do unless you pay them really well. Because they're just hard jobs and they're a pain and it's challenging. This is the stuff where you can say, hey, you're still going to have the job overseeing the robots, but they're going to be able to do more than we could do on our own, and it's going to give you that additional power. It's no different from, hey, when you had to go and, put all the screws into the house by hand, hammer all the nails in by hand, man, it took a lot longer to build a house than with a nail gun and some power tools. But we didn't say, well, we can't do that because we'll lose jobs. No, we just said, hey, this will help us build more houses.
Yep.
So will robots. It'll require different skill sets and different ways of managing it. And I do believe one of the big threats here is, hey, a lot of, and I'm guilty of this too, saying, hey, like, think about all these jobs that you can't outsource, like plumbers and electricians. And I think more of those jobs are unfortunately going to be threatened by robots than we want to admit now. And so it's not just the office worker who's going to get, their job threatened by large language models and things like that.
Not just the Amazon warehouse worker who's getting threatened by the automation.
It's all of us. Like, yeah. I'm telling you, there are different forms of AI and robotics that are going to come for all of our jobs. And we're all going to have to reckon with this, and it's going to be hard because I have no idea what the path is to managing it. But it's coming for us, and Tesla's going to compete on that playing field because I think they rightly see that this is the next frontier. Can they win on that one? I don't know. But they're going to compete, and I do completely agree that there's no one but Elon that can run that company because more than any
shareholders wouldn't allow anyone other
more than any other executive I've ever seen, even Steve Jobs and Warren Buffett, the alignment between the brand and the person is just at a different level.
Yeah, right or wrong, that is definitely true.
Let's take a quick break. When we return, we've got some trivia.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com. Every dollar you've saved in retirement accounts and life insurance tells a story of hard work, smart choices, and the future you envision for your family. One way to help that story end well is to make a beneficiary choice that does more. This month's free guide from Cushing & Dolan, IRA and life insurance planning, estate tax strategies, and nursing home protection explains how naming your estate as the beneficiary of your IRA or life insurance can add a layer of tax efficiency and nursing home protection, while still allowing your spouse access when it matters. It's about keeping more of what you've built working for your loved ones now and in the years to come. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
All right, time for trivia here in the Financial Exchange. Today is Prince Harry's 41st birthday. As the younger son of King Charles and Princess Diana, Harry is in the line of succession. However, he will likely never take the throne. Trivia question today, where is Prince Harry in the line of succession? Once again, where is Prince Harry in the line of succession? Be the third person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385. $13.85 will win that T-shirt. See complete contest rules at financialexchangeshow.com.
Couple stats on the auto loan industry that just continue to tell me that, man, we're not doing it right when it comes to buying depreciating assets that are typically either the most or second most expensive purchase that we ever make in our lifetime.
Yeah, really bad
so,
at it.
Here's the deal. 26.6% of trade-ins towards new car purchases in the second quarter had negative equity, meaning they owed more than the car was worth. And specifically, the average number was about $6,700 that they owed relative to what the car was worth.
That is a tremendous amount of negative equity. I
So-
just want to throw it out there. That's a lot of money to be underwater on your car and trading in.
So I gotta
Not to
tell
be
you-
underwater,
right?
But to be trading in.
So, and here's how it happens. It's because people want to buy certain vehicles and they can't afford them, and so they end up taking on like 7 or 8 year auto loans. 7-year auto loans now are almost a quarter of new loans that are out there. And here's what I have to say about this. It's not necessarily even don't buy the vehicle. Because, look, here's the thing. All of us do things that are not the best financial decisions from time to time. I certainly do. I do things where it's like, you know, if someone like looked at my credit card and was like, you spent what on what? I'd be like, yeah, probably wasn't, you know, the best thing, but hey, like, whatever.
I'm interested to see where this is going. Go on.
Where I'm going on this is generally, if you're someone who is taking out a 7-year car loan and then trading it in with a bunch of negative equity, usually means you're trading it in within the first 2 to 3 years of that loan.
Mm-hmm.
If you know you're someone who wants to have a new car every 2 to 3 years,
stop buying.
You should be leasing, not buying.
I got to tell you, if you are doing this, I can think of like 2 scenarios in my mind where this makes any sense at all. Any sense at all.
Which ones?
Your car's totaled and you have no choice.
Yeah, that's not happening a quarter of the time.
No. So, like, there's your scenario number 1. My car got
Sure.
totaled. I cannot drive it, or it's so unreliable that I need a new mode of transportation in order to continue working.
Even there, quite honestly, I don't know exactly how that works between your auto loan and the insurance company. Like, it's not technically a trade-in.
It's not a
then.
trade-in, yeah. So I don't think that actually fits this category, but that was one of the circumstances I thought of where, like, okay, yeah, if your car is ruined,
Sure.
you can be underwater, and I can understand how
Totally
that
get
happens. The other one would be, I suppose, if you're driving a $60,000 car and you finally have a come to Jesus moment and you're like, yeah, I can really afford a used Honda and I'm driving an Audi, and so I am going to trade in my negative equity vehicle and go buy a cheaper vehicle with a much smaller payment and come out on top because of that. Even then, I've got a ton of questions. Every other scenario out there is terrible personal finance.
If you need a car that's new every 2 to 3 years.
Tucker,
I just thought of another example.
Yeah.
Just third kid. You need to upgrade and get a bigger car, third row. I know somebody had to do that recently, and they had a previous car. I think it was a Wrangler, and they only had it for like a year and a half.
Yeah.
And they had to get a bigger car because of the third kid.
Yeah, you know, that is another scenario that does fit in there, and I guess I go back
can
to
buy
like,
that.
Yeah, I do too. Because I want to see more planning.
It's a one-time upgrade.
Sure, yeah.
Yeah.
And again, like when you say you want to see more planning, like, look, we all have things that it's like, oh, gee, I wish I could have planned for that.
Yeah.
Life happens.
Like,
Yeah,
this is
life
what I'm
happens.
saying. Like, we all have times where we don't make the best financial decision. But when 26.6% of trade-ins have negative equity,
It's not because all of them are being financially disciplined by getting cheaper cars and suddenly had babies. That's not a quarter.
Right, yeah.
no, there's just not that many three-kid households these days.
That's not a quarter of households. Usually, what it is if you're someone, you got enticed by that new commercial for that brand new pickup that you just had to have.
Oh, look at that pickup.
I will feel so much manlier with that pickup.
Guys, I'm not going to rip on the pickup owners. It's not just like...
Well, it's not just them. Yeah.
I'm picking on them because it's the like best-selling vehicle out there, and so that's where I'm honing in on. But you're right; it's everything else under the sun.
If you're someone who needs a new vehicle every 2 to 3 years, and that's your thing, like again, we all have our thing.
Yep.
I go to a lot of Boston Bruins hockey games. I enjoy it.
Immediately depreciating asset.
Is it the best financial decision? No, especially not this year where they're going to lose like 70% of their games probably.
Yeah, we'll see about that.
Okay.
Sneaky.
Let's not go too far.
No,
so, in any case, we all have our things that we spend money on that are not good financial decisions.
But there are better ways to do it than continually trading in underwater cars.
Think about whether or not a lease could make sense for you where, hey, your payment might actually be less, and then you don't owe a bunch at the end of 3 years, and you can just move into a new lease anyways. There are ways that you can structure these things that are better.
My signal would be that if you're underwater on the car in the first place by $6,700, then going with the lease instead is still probably not the financial decision that's best for you.
Maybe not. But
easy to judge from over here.
We just got to make better decisions on the cars. Quick break. Trivia Answer and Wall Street Watcher next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Generally, for a married couple, you have several choices. The most commonly used one is you're you're going to make the surviving spouse the designated beneficiary. It doesn't shelter assets from estate taxes. It just passes to the surviving spouse. It avoids probate, and it's probably the best way to go from an income tax perspective, not necessarily an estate tax perspective. Another way would be you could technically name the trust the beneficiary of the IRA when you pass. That at least will help it shelter assets for estate tax purposes and still provide for the surviving spouse. But from a Medicaid perspective, it will then protect it from the nursing home, but it'll take 5 years. Perhaps the newest and best way to do this would be to name the estate the beneficiary, provided you are over age 73 or over. That way, it goes through probate into the will. It is sheltered for estate taxes. It is immediately protected from the cost of long-term care for the surviving spouse, and the surviving spouse has access to it as well.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide, Why Name Your Estate an IRA Beneficiary, right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Fed meeting week is here, and markets are currently in mixed territory as Wall Street eagerly awaits the central bank's likely 25 basis point interest rate cut at the conclusion of their meeting on Wednesday. Right now, the Dow is dipping into negative territory. S&P 500 is up 0.4% or 28 points higher. NASDAQ up 0.8% or 177 points higher. Russell 2000 is up about 0.5%. 10-year Treasury yield down 2 basis points at 4.036%, and crude oil up nearly 1% higher, trading just above $63 a barrel. According to Treasury Secretary Scott Bessent, the U.S. and China have reached a framework deal for social media platform TikTok. Meanwhile, a new filing with the SEC revealed Tesla CEO Elon Musk purchased about $1 billion in the EV maker's stock, marking his first purchase of the stock in the open market since February of 2020. Tesla stock is up over 6% now. Another major name in Nvidia making headlines after China's antitrust regulator said a preliminary investigation showed the chipmaker violated the country's anti-monopoly law and would conduct a further investigation. Nvidia stock is retreating about 0.5%. Separately, China said it had launched probes into certain U.S. analog chip imports. Texas Instruments down nearly 3%, while analog devices and ON Semiconductor are seeing slightly or trading slightly lower. Wall Street Journal reported that agriculture company Corteva is mulling a breakup that would separate its seed and pesticide business into two separate companies. That stock is down about 3%. And with its gains today, now up about 3%, Alphabet has officially surpassed $3 trillion in market cap. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, where is Prince Harry in the line of succession? That would be fifth on the list. Prince Harry's behind Prince William and William's children, George, Charlotte, and Louis. Bart from Sutton, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Bart. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, we're starting to see kind of an interesting set of anecdotes popping up that I don't think we've really heard in probably 12, 13 years. It's the ones of, hey, I've got, a college degree or an advanced degree, beyond that, and I can't figure out how to get a job other than, hourly work that I feel overqualified for. So there's this piece titled, More Americans Are Stuck with the Jobs They Can Get, Not the Ones They Want. And the last time that I feel like I really heard about this proliferating was probably that post-financial crisis period.
Yeah.
The part that makes this really interesting is that unemployment right now is at 4.3%. And if you look back at, the post-financial crisis period and where the unemployment rate was Then...
When did it peak? 2010?
Yeah, you peaked in 2010 at just around 10%. So more than double the unemployment rate of now, but it was high for a while. I mean, you didn't get below 6% until you were out to like 2014 or so. So I guess what I'm trying to reconcile is a few different things. We know that the hiring picture for recent college grads is not good because they now have a higher unemployment rate than the rest of the country as a whole. Same thing for recent high school grads. It's not a college grad thing. It's just recent grads
Americans
are struggling. So I can reconcile that. But overall, the damage to the labor market seems to be relatively contained simply because combination of demographics and deportations has reduced the available labor force. And so if you had a job prior to the last couple of years, you should generally be in a pretty good spot because you're probably in the same job that you've been in or have been able to make a lateral move. So I guess
the big difference is it's not being paired with layoffs.
No, so I guess what I'm trying to reconcile here is, this talks about, hey, more Americans are stuck with the jobs they can get, not the ones they want. That still feels to me like it should be a relatively small subset of the population, and yet these stories are coming out. So I'm just trying to make sense of this and what it means, I guess. This one of the people they interview in here is a 36-year-old. Now, granted, she's in, IT, which is, an area that's being potentially changed by AI as well. But I don't sit there and say, wow, this must be a really tough job market for mid-30s IT specialists. But maybe it is. So I just feel like I don't have a great handle on this labor market, I guess.
I do get the sense that it is a pretty tough... When I talk to people that are of any age demographic working in coding, software development, IT sales, any of those areas, not all of them are unemployed, don't get me wrong.
Sure.
A lot of them are either unemployed or very nervous about their future employment. And I think a lot of that has to do with a number of factors, but AI especially. The other area that I see it, and probably only because we operate in the Boston area, biotech. Anybody that's been working in the biotech space, it really any level, whether it's marketing, corporate, consulting, there are a lot of folks there who are saying this is not the market that was just 2 or 3 years ago. But I'm with you, Chuck. I don't know what that means for their broader economy. And I don't think it's going to mean, in 2010 it meant people losing their houses. And it doesn't feel like that right now.
Well, and I guess the other things are, when you look at a lot of the broad-based economic data out there, not even from the federal government, talk about, what you see from the banks and retailers, there's not really anything out there that's pointing to, a broad-based downturn.
Now, the spending's still happening.
But it's
just the uncertainty seems heavier, but everything else is still... I guess the answer is people seem dissatisfied, but are generally making ends meet.
But this also then gets back to, hey, so much of the spending power is tied to the top 20% of the workforce now that maybe it really is just the vast majority of people are struggling, but they don't make enough to have it, impact the broader spending distributions at this point.
Yeah.
It's either way, it's not good.
It's not. I keep going back to something, Chuck, though. I do feel as though a lot of employers are really nervous about separating from their existing employees and hiring new ones. And part of that is a general concern about tariffs and the economy. Part of it, I really genuinely believe that investors right now are interested in efficiency. They want to see efficiency at companies, and they want to see them be able to point towards AI as the reason that they're becoming more efficient. And that has to put pressure on managers as to whether or not to hire. I really think that is an effect that is only kind of attached to the AI story, right? I think the exuberance around artificial intelligence is causing hiring managers to say, I really got to put a cap on my spending here because we need to signal to investors that we are benefiting from AI, whether or not we truly are. And so that could turn around.
Hey, this fall, why just watch the leaves change when you could watch the sunset over turquoise waters? Well, the U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferried over to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean, the U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Piece in the Wall Street Journal: an unresponsive public is undermining government economic data. Not intentionally, but it's just, hey, these are largely survey-based results that we report on a monthly or quarterly basis in many cases. And the survey response rates have been... Here's what's interesting. The initial month survey response rates are lower than they've been at any point, but we are still collecting basically the same level of response rates, just on a much delayed schedule right now.
Yep.
And that's pretty much been the way things have trended for the last 5 years at this point.
This should not be surprising at all. I want to just, let's rewind 20 years ago when we found these data points to be a lot more reliable. When your father needed a bunch of tools and some groceries, he would drive to the local hardware store and then the grocery store and pick up everything in his cart. Today, I would guess that you, Chuck, get half of those items from Amazon delivered to you. And then subsequently, for every individual order, you get a survey request. Hey, what did you think of this purchase? You might get 3 or 4 of them.
Sure.
You go book a flight, and then you stay at a hotel and rent a car for your vacation.
Tell us how we did.
Please tell me how we did. How was the review? How was your stay at the hotel that you stayed in? Every single thing that I ordered a salad for lunch. I'm going to get a survey request. I'm not shocked.
How's your salad?
I haven't eaten it yet, but I'll let you know.
So not good.
I'm not shocked that people are not responding to these things. You have caller ID in a way that you didn't previously, and go talk to anybody, by the way, that worked or works currently in any sort of business that requires people to pick up the phone in order to do that business.
Well,
nobody wants to, for good reason.
Guys,
I don't want to pick up my phone.
Let's be honest. When someone called, when the phone rang 30 years ago, first of all, it was in your house.
Yep.
Because there were no cell phones. Mm-hmm. And you knew that it was something legitimate. It might not be someone who you liked. Like, it might be the telemarketer calling at 6 p.m. right as you're sitting down to dinner.
Might have been a politician asking for your vote.
But you knew that it was a real person and something legit. The percentage of phone calls that I get now that are scam versus legit, I'd say it's probably 9-1.
Yeah,
the ratio.
I was going to put it in there somewhere.
Now, part of this is just because I don't make many phone calls.
Yeah, it's all done via text.
But the vast majority of calls that I get are someone trying to scam me about, hey, the IRS is going to, take your, I don't know what they're going to take, your salad for lunch. And it's just like, no one picks up the phone, or even on email, all the unsolicited stuff that you get. How many of them you're like, not sure if this is a scam or not, I'm just going to delete it.
And even if it's not a scam, though, again, I keep going back to the example from 30 years ago. You were not asked to review every product that you put in your shopping cart.
No.
Today you are, and it's exhausting. And I don't really know how the government improves upon this without just going and stop. There's a few things that I can think they could, like, hey, we're just going to take the data from actual employment sources and use that to estimate it instead of doing these surveys. But I can't really think of a different survey methodology that's going to work better. Is texting people going to work better? Is pushing it to social media going to work better? I don't think so. So I don't really see a path for these statistics to get more accurate.
You know how there's a national do not call list?
Yeah, I register for that. Doesn't work.
Doesn't do anything.
First of all, it doesn't do anything.
Yeah. Nope.
Okay, so now we can actually talk a little bit about the real problem, which is that the telecom companies have no incentive to crack down on any of this, and it basically leads to the proliferation of all of it.
Yeah.
Which gets me to, there should be a national do not survey list.
Yeah, again, is that going to work any better?
No, but I'm just saying I like the idea and concept.
I mean, I do too, but have you ever gotten a legitimate survey from the U.S. government? Because I haven't.
No, like that's the other question. How do I get on one of these lists? Like, I'm one of the 6 people that
would actually respond.
That'd be like, ooh, the BLS reached out to me. Yes, I'm going to tell them if I'm employed. Like, I would get so excited if I got a legit email, a legit survey from the BLS or like the Census Bureau.
Yeah. The only survey requests that I get are for products that I have purchased, products or services that I have purchased.
Right. Like, you give me a BLS survey, I'll be like, yes, can you get me one for my neighbors too?
We're going to dedicate a segment to it on the Financial Exchange.
Please, I'd love to. In any case, let's take a quick break. When we come back, we'll do some stack roulette.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort, Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your retirement savings and life insurance benefits are more than numbers. They're part of the legacy you've worked hard to build. And with the right plan, you can help protect them for the people you love. This month's free guide from Cushing & Dolan, IRA and life insurance planning, estate tax strategies, and nursing home protection shows how naming your estate the beneficiary of your IRA or life insurance can help reduce estate taxes and protect assets from nursing home costs, and still give your spouse access when it's needed most. It's a straightforward strategy that can provide lasting benefits for you and your family. You'll learn how this approach can fit into your overall estate plan and why it may offer more flexibility than other options. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or request the guide online right now at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This year's DAV 5K is less than 3 months away, and slots are continuing to fill up fast. So if you'd like to participate, now's the time to register. The race is Saturday, November 8th at Castle Island, and you can visit dav5k.boston to sign up or join our team, Team TFE. Your support helps fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston to register today. That's dav5k.boston.
Mike, what do you got for Stack Roulette?
We've got this piece here. I don't even know who this is from. Financial Times. How to build $1 million future for your kids. And it goes into these inheritance strategies. But that's kind of reminded me of a client conversation that I was having just the other day. And it was with somebody who is a very high income earner. I would say top 3% in the nation in terms of income. And they were talking about their finances, their spending, and it was very much a keeping up with the Joneses conversation. Like,
sure,
our friends that are of similar backgrounds, like, they're wearing this flashy jewelry and driving these gorgeous cars, and I feel like we don't do that stuff, and yet I still don't quite feel sound in my retirement. And I brought something up with them that hadn't even crossed their mind. Like, this was a person who, generally put themselves through college and med school, had a bunch of loans to pay off when they're done. And I just mentioned, like, did you consider the fact that they might not have done it their own? Like, these people who are spending way more money than you seemingly, and I don't know.
Sure.
It's entirely possible that their financial situation's an actual wreck.
Right, you have no idea what they look like behind the curtain.
It's also possible that their parents left them millions of dollars that you're not aware of. Like, these are scenarios that I don't feel like cross people's minds when they're evaluating other people's finances. It's all, what are they doing right that I'm doing wrong? When in fact, a lot of the time, it is nothing like that. And nobody likes talking about personal finances, and I don't think they should. It doesn't make good dinner conversation. But that keeping up with the Joneses mentality is really dangerous because of what you don't know.
Even more than that, the other thing that I always come back to is, look, it doesn't matter what you do. There's always someone with more money than you.
Yeah, unless you are Elon Musk, there is always somebody with more.
There's always someone with more money than you.
Yeah.
And like if you look at even just, where things are today in terms of like overall like income percentiles and things like that, there are like over 1 million households in the US with household incomes over $700,000 a year. Like a million households. Yeah. Like it's insane how much money there is out there. Like you're never going to get there. So
don't compare.
No, like it's just not, you're not going to get there. There's always going to be someone with more money than you. And so you got to run your own race. Let's take a quick break for the entire rest of the day. We'll see you tomorrow on the show.